Hey guys, so it's that time of month where we're going to go through my Vanguard portfolio. So as always, we'll start with my ISA and then we will go through to my SIPP just to see how things have performed. And to my fellow investors, my portfolios are looking bleak as well. So you're going to see the same thing over here as you're probably seeing in your own portfolios. But let's just jump straight in. So my goal this year is to stick with the same strategy that I stuck with for the entire of last year. So I haven't changed anything and I just want to see how it goes for this year. So at the end of 2022, I'll make the decision whether I want to change things up a little bit. But for now, we're just going to see how it goes. So I won't go through the goal weights and the current weights because I've gone through that in every other video. So if you want to know and get an idea of why, then you can go to the previous videos for that. But let's just have a look to see how things have performed. So the VWRL, since I've started investing in this, which is a year and a half or so now, my total return is 14.61%. So not that great. I think last month this was showing like 20%. So this is quite significantly dropped, but that's just the nature of the stock market right now. It seems like it's like that across the board. It's the same in my trading 212 account, my free trade, everywhere it's just gone down. But still, at least I'm in the green. So 14.61%. Then for the Pacific Index Fund, my return is 5.79%. This is just, quite depressing, but it is what it is. S&P 500, 28.33%. It makes me think of all the people who only invest in this. Your portfolio is probably still doing quite well. That is my highest performing one again, month after month, it seems. The FTSE 250, 7.96%, so not too bad. And the ESG emerging markets is negative 4.68%. I don't know when this is going to topple over to finally be positive consecutively for a few months, but that's what we're working with. And then all world high dividend yield is 20.8%. So this one is a pretty strong one and is doing quite well. So what I did want to show you this month actually is what it looks like with dividends. So this return since inception is just taken into consideration the capital growth. So no growth including dividends. I haven't included that. So there's two, when you have Vanguard, you'll see that there are two different return rates. One is the capital return, so no dividends included, and one is the gross return, which includes dividends. So if we look at the fact of I am receiving dividends and that is part of the growth, we can have a look to see what the return has been since I started investing in all of these funds. So for the VWRL, the return since inception is 16.57% when we include dividends. So it's looking a little more positive. For the Pacific Fund, it's actually 5.79%. And the only reason why I can think this is because it is an index fund and not an ETF. If anybody knows what the reason is, then let me know below in the comments. I've tried to find information on this, but I'm not finding, but then again, I didn't really look that hard. But if you know why this is, then do let me know below. But I think it's because it's an index fund, and I'll tell you why in a minute. S&P 500, the return is 30.22%, so just about 2% more when we include dividends. For the FTSE 250, it's 11.03%, so that's quite a bit of a difference when we include dividends. The ESG emerging markets is also negative 4.68%, and this is why I think it's to do with index funds, because I only have two index funds in this portfolio. That is the Pacific excluding Japan index fund and the ESG emerging markets index fund. So both of those are index funds. Both of those don't seem to be having any dividends. So that is the conclusion that I came to. And then lastly, for the FTSE All World High Dividend Yield, the returns are 25.9%. So that's 5% more when we include the dividends. So again, that's looking a lot less bleak. So the total return since inception without dividends, so just the capital, is 11.39%, which we can see is really, really quite low historically. I mean, that was similar to what I had back in August of 2021. So it hasn't really moved. It doesn't feel like it's moved much since August. But Again, it's just the nature of the stock market. I'm not panicked. I'm not worried. I'm just going to keep putting money in every month because it's just what you have to do. This is what you do to build wealth. And the experts of old say this is how the stock market go. It will go up and it will go down. And when it's down, if you keep investing, you're benefiting from buying in at cheaper prices. So really it may feel like a loss, but it isn't if you continue to invest. Now, if we look at with dividends, my total return since inception, then that is 12.95%. So there's not a huge difference, but over a percentage. So that's looking a little bit healthier, but I just wanted to talk through that because if you do have Vanguard, then you may have those two different percentages and you may have been wondering what that means. Now for my pension, if you were around last month, then you would have seen that my pension was just over £17,000. And now I'm back under £17,000. So now I'm back to around 16,000. Well, 16,700. So, it's just taken a dip in the past month. What can you say? It is what it is. So if we look at what's happened, it's obviously still much more up than when I first invested back in the 15th of March. That's when my money transferred over from my employer pension to my SIPP. So that's where it was at the 15th of March. And the price per unit then was £169.56, whereas now it is £187.96. So it's definitely gone up, but obviously it's lower than it was last month. So I do like looking at these graphs because it gives you a bigger picture of what's really happening and what's really happened over time. Now I'm just going to quickly touch on what a SIPP is, and I'm actually not going to just make this up off my own head and based on my knowledge. I'm just going to read what they have on the Pension Bee website. And the reason why I'm going to do this is because I get this question a lot. A lot of times people comment on these Vanguard videos saying they had no idea that they could have a SIPP. They had no idea that they could transfer their employer pension into their SIPP. And the thing that I want to kind of stress about that is it really just depends on your circumstances. So just because I've done it doesn't mean you need to do it or that it's going to work better for you. Again, the reason why I did it is because I wanted lower fees. So now I have a lot lower fees with Vanguard, and because I just enjoy doing this stuff. So I take the time to do the research. It's not something you need to do necessarily. If you're happy with how things are going with your employer pension, you don't necessarily need to touch it. It was just because I have an interest and I wanted lower fees, and so I've decided to go with this option. So a SIPP stands for a self-invested personal pension, and it basically allows you to decide how you want to invest your money. So it's a form of defined contribution personal pension. So back in the day, they used to have, well, I say back in the day, some people still have it, defined benefit. So how much you would have when you retire was defined. You would know exactly what you'd be getting, but now it's based on contribution, how much you contribute and what your investments do over those years. And I say investments because a pension is just investments. All they do with your money is invest it in the stock market for you so that it can grow by the time that you retire. Now on Pension Bee, they talk about why you may decide that a SIPP is right for you. And I'm just going to read for you verbatim what they say. So a SIPP can be a good option if you want to combine your pension pots into one single fund and then actively manage your money yourself, or choose a money manager to do this for you. So it's definitely great if you've got lots of different pension pots all over the place. You may want to combine them into one place. So Pension Bee is somewhere that does this for you, but they do it. I don't think they charge you, but then you have to invest in their funds, which means they get like a cut of your investments. But yeah, this is definitely good for people who have pension pots all over the place and they want it all in one place, and to have a bit more control and a bit more oversight. This is good for you. Or if you have a specific fund manager that you want to be with, or platform. So for me, I wanted to be with Vanguard, so that's why I've chosen Vanguard. So yeah, there's a few different options why a SIPP may be a good thing for you to consider. They also go on to say that with other types of pensions, decisions about how to invest your money are in the hands of your pension provider, which was the case for me and why I wanted to switch. This means that a SIPP comes with a certain level of responsibility and requires savers to have some understanding of investing and to keep an eye on their investments. And I think this sentence right here is really, really key. It comes with responsibility. There's no point of getting a SIPP if you have no idea why you're getting it, no idea what you want to be invested in, no idea what the fees are for your current pension and what they will be once you transfer it. You have to have a bit of know-how to make it worth your while. And so I think it's really important and key to understand that don't just transfer for the sake of it. Understand what it is you're doing, whether you seek financial advice to understand whether it's a good idea for you, or whether you do lots of research to understand whether it's a good idea for you. And then lastly, they go on to say that you can usually opt to pay quite a low monthly amount into your SIPP, but a higher monthly contribution sometimes gives you access to more investment options. So for me, how it's set up with my employer pension, I can only do a transfer yearly, but I could also pay personally into my SIPP if I wanted to. And then there's tax benefits that come with putting money into your SIPP, but I'm not going to focus on that this video because it will just be too long-winded. But I do hope that this has given you just a bit more of an understanding, and now you will do your own research into what a SIPP is, if it's a good idea for you, if it's not a good idea for you. But yeah, that's why I've done it. It was a good option for me. And yeah, to this day, I'm definitely happy that I made that decision. So that is it for today's video. I hope you've enjoyed it, and I hope it's been useful for you if you're looking into SIPPs. And I look forward to seeing you in the next video real soon.